The Real Estate and Housing Developers Association Malaysia, REHDA, is seeing some positive signs in the property sector amid still mixed statistics registered. REHDA's president, Datuk Ngeng Siang Leong, says that the property market volume has been hit hard by the global crisis when total transactions decreased from 10.5% in the first quarter of 2008 to negative 9.4% in the second quarter of last year. He says that property transaction decreased to 79,149 in the first quarter of this year from 80,163 in the same quarter last year. The decrease affected total values by 35%, dropping to 16.9 billion ringgit in the first quarter of 2009 from 24.3 billion ringgit in the same period last year.
According to the statistics, you can see that the sales of houses in Q1 and I think Q2 has already dropped. So we just hope that the second half of this year will be better, to see the improvement in the property sector.
Speaking to reporters after delivering his keynote address at the 20th National Real Estate Convention today, Ng notes there was a slight increase in the numbers of housing transactions, especially in the residential properties, which saw 50,506 units or 63.8% in the first quarter of this year, compared to 49,234 units in the last quarter. He, however, cautions that it is still too early to anticipate a full recovery ahead.
I think we have bottomed up at the end of June this year. That is my personal feel. We should be moving upwards by the second half. Just that we are only worried that the statistics that are given to us, whether there can be an overbuilt situation. So we have to be very careful.
He says that the most important factors for the sector and its developers are consumer confidence and that the location of the particular development. He also states that the numbers of property completion and starts increased in the first quarter of 2009, but new building plans approval dwindled. Ng adds that the housing market is currently in a supply-led situation with existing housing stocks at 4,230,328 units as of first quarter 2009.
What happens if you build and then if nobody stay? That's even worse. So you have to make sure that you have that sort of demand.
Ng adds that due to the crisis, supply has been shrinking as developers are more prudent in their launches and are more concerned on clearing inventories and reducing overhang. He advises developers to be cautious and do their research before any big launches. Ng says that the residential sector is expected to see moderate growth due to weak consumer sentiment, while capital values of office and retail assets are heading towards a downward cycle. On prices and rental, he says that prices have softened between 5 to 10% lower in certain locations, but prices in prime locations are still holding up well. He pointed out a survey done by REHDA for the first half of this year, with responses by 105 developers from Peninsular Malaysia, indicates that the property price movement in the next 6 months will remain stable, and even if there is a price increase, it is unlikely to hit above 20%.